Second day of the week. As we always do, we like to zoom out here to the monthly time frame. You can see relatively unchanged on the monthly, right? We are trading a little bit higher than the close from yesterday right now, but we closed one tick above yesterday's close, and we're sitting back inside the previous month's range. Like we did yesterday, right? We found out where 50% of this was, and it was right off of that low. So should we break this monthly low, we want to understand that there may be a little bit of short covering or liquidation, excuse me, and may draw the market a little bit lower, right? We had a +4 month, and as long as we remain below that close, which was 53.08 half, then the odds for increased liquidation, especially the more time that we spend below that level, the odds for increased liquidation are higher. Switching over to the weekly, you can see we're still inside the previous week's range, right? We're kind of in this 3-week balance, slowly developing into kind of a 4-week balance. We are trading, at the high of the range and just kind of trading sideways. And so this is what I would call, or what I actually learned from Peter Rezicek. Sometimes trend line breaks are broken from price action, and sometimes they're broken from time. And the trend lines that break from time tend to be a little bit less, how would you say it, like a less conclusive, right? So if we had a trend line break here to the downside, and the market was to get a solid break, the odds would increase that you would get this continuation to the downside. But since we're just kind of breaking the trend by trading sideways, then it's not as clear or not as strong of a reversal type of look. Switching over to the daily, you can see 1, 2, 3, 4, 5 day balance right here, down here at the lows. We're really inside an inside day. It's like Inception, dream inside of a dream. We had the 5th, which was Friday last week, inside Thursday's range, and then Monday's range yesterday, completely inside Friday's range. So we're inside of an inside day. Very tight range. This often can lead to, big range expansion, and a lot of times can lead to moves in both directions. So just be careful. Don't get whipsawed here early on. Now switching over to the profiles, we can see overnight inventory pretty much, neutral. I guess we could lean it a little bit long since we've had this late day break higher. Still inside yesterday's range, which was a very tight 23.5 points. Overnight session 22.5 points. So basically trading up to that poor high, unable to break, trading down to the low, unable to break. We did have a couple references yesterday, or a couple weak references yesterday on both sides. We had that poor high and a poor low. And like I said, the market settled just a quarter above the settle from the 5th. So not much real information from there. What we tend to do on days like this is kind of zoom out and see where the larger levels are at. You can kind of see these two larger distributions here. All right, we can see this kind of ledge right here up to here. There's one distribution. And then we see this ledge here all the way. I mean, you could, a little bit of a distribution there, which got this ledge all the way down 42.16. And so that kind of becomes this make or break point. So this is going to be in unfair high / unfair low, right? This area here, right? An unfair high for this distribution, unfair low for this distribution. So if we imagine that this is selling at the top, then, and these are buyers, well, they're in kind of a make or break decision area here. So as far as today goes, I think the key level that the market's going to need to hold is actually going to be the 53, which is yesterday's settle. I do have that go or no go level. I still think that's going to be important at 40.25. And then possible drop to that prior caught point of control. Now below that prior point of control, I'm still basically subscribing to the fact that we're most likely going to get a little bit weak, and that's where the downside is going to come from, and that's where we're going to be looking for this lower ledge. That's about 42.15. I mean, inside really just, completely choppy inside here. Even inside here can be completely choppy, I think. So you just got to be kind of careful of this level. Should the buyers get above this ledge here, which is at like 575, that's where I think the upside starts to go for. And we head back towards that 5308, and then our go no go level kind of on the top, whereas like you could look for a fade up here if you're being brave, or if the market is just saying, I'm not that strong, right? This is only 20 points up, so it's possible for the market to roll up 20 points and then roll back down 20 points. We saw it yesterday, right? 23 range, it traded from high to low a couple of times. So if we get that kind of look today, there is some opportunity to fade, but above that 52.90, I think you want to be a little bit careful. Don't really want to trade to that, because most likely we end up trading to that 53.15. So you got 52.15, 53.15, so pretty wide range and a lot of chop, kind of along the middle. We're really looking to see if it can capture that 52.75 to start the upside, or below that 33 to start the downside. Tomorrow's the big news, and then Thursday we have news as well. So not really a ton of action expected today, I guess we could say. But definitely something that we want to be just aware of, right? May be a day similar to yesterday. So if we are in profit, might be best just to take it off the table and call it a day. Look for something new. 2 trades last night, 1 gold trade, 1 oil trade. Both are closed already. Pretty decent moves in both, so not bad. Yeah, other than that, that is pretty much it, right? Not expecting too much today. Quick and easy. You guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan, and I'll see you guys tomorrow. Morning, one.